Hi friends, time to give you an analysis of a company that I have just added to my watch list. A while back I had the urge to take a look at the UK stock market as sentiment in the post-Brexit UK in regards to stocks has been quite bad. A few weeks ago I told you about another stock from the UK stock market that I added to my watch list. That was Dr. Martens, which has a great brand and low amount of debt. And now I think I have found another company that looks quite similar to Dr. Martens with practically no debt, and that is Greggs. I am sure if you are from the UK, you 100% sure know what Greggs is as a company, but for the international viewers here, I will let ticker.com explain it to you quickly now. Greggs plc operates as a bakery food on-the-go retailer in the United Kingdom. It offers a range of fresh and frozen bakery products, sandwiches and drinks. The company sells its products through its shops in travel, leisure and work-centered catchments, and franchised shops operated by partners in travel and other convenience locations. It is also involved in the property holding, non-trading and trustee businesses. As of December 28, 2019, the company operated 2,050 shops, which included 302 franchised shops. Greggs plc was founded in 1939 and is based in Newcastle upon Tyne, the United Kingdom. Now, here is a pretty impressive fact for you. There are roughly 1,400 McDonalds restaurants in the UK, but there are over 2,400 Greggs in the UK this year. Also, as you heard from ticker.com's explanation, since 2019 they have opened as many as 400 more shops already. So we are talking about a huge fast food player in the UK market, and I think I read from somewhere that actually, at least by the number of shops, Greggs is the biggest fast food chain in the UK, overtaking Subway too. So economies of scale with Greggs we do have as a company to invest in. In regards to the menu, they offer for customers, they aim to be value for money, which I have to admit I like. I believe there is always a market for low-cost, decent quality food in the UK and also around the world, so this is good. Looking at their menu, they do have international offerings that I think anyone can enjoy, like baguettes or sandwiches, but they also have very British food like breakfast rolls, sausage rolls, pies and stuff. I was happy to learn that the company already tried to go abroad to Belgium in 2008, but quit operations as unsuccessful. Personally, as there is still growth potential in the UK market left, I would like to see them actually focusing on the UK market, but unfortunately the CEO Roisin Curry has recently flashed the idea of trying again going abroad with Greggs. Have to say I don't like this as an idea. As a potential investor, I want rock solid explanation why it will work out now when it didn't work out last time they tried it. Should I not get an explanation that even a 12-year-old can understand, I will reevaluate this potential investment idea. I don't like companies trying to grow just for the growth's sake. If you have already economies of scale in your local market and still potential left in your local market, clearly they must understand that sausage rolls should only stay in the UK and offerings need to be matched with any other country's local cuisine and trends. Still, I need an explanation why they would think they can grab a share of the fast food market in a foreign country. Why are you doing things better than the players that already exist in any given country they are planning to go next? Nevertheless, let's summarize the things I like about Greggs and why it has gone to my watch list. Firstly, as I already told you, economies of scale in the UK market and proven success in the past in the UK market. Economies of scale in the UK market, in my opinion, is their biggest moat. What do I mean by economies of scale? Obviously, I mean buying of your raw materials. When you are big and you're buying huge quantities of raw materials as any company, you will get it with lower price from the suppliers. You have more negotiation leverage to your own suppliers. This is what I mean by economies of scale, and Greggs truly has it in the UK market. I imagine most of their ingredients, raw materials are sourced from within the UK, obviously. Some might come abroad, probably many come from abroad, but still from Europe, for example. But nevertheless, you understand what I mean. They are big and they have economies of scale in their purchasing function. So you should be able to get raw materials really cheap, or cheaper than your competition. Next, the company has practically no debt, which enables them to grow also in the future. As I said, I would hope them to grow in the UK instead of foreign markets, but we will see. Nevertheless, when you don't have any debt, that gives you more options strategic-wise in the future. And finally, stable and easy to understand business model. Fast food, not the most difficult industry in my opinion to understand. Pretty easy, so easy to understand. Risks of investments are lower than, for example, at some industry that is much more nuanced and more difficult to understand, at least for me. Then some things I don't like seeing with Greggs. CFO Richard Hutton is the only member of management and leadership team having skin in the game and owning the company stock. Others don't really have skin in the game when we talk about Greggs management team and leadership. Management team and the board, so the leadership. Also, there are no recent insider buys, so no indication that insiders think that the company would be undervalued today. It would always be nice to see insiders buying the stock too. That gives you more confidence that the company really would be trading undervalued at the moment, but so far we haven't seen it. And we conclude, as always, now with my valuation of Greggs. With 10% discount rate, I think the company's fair value would be £31 per share, but after my personal margin of safety, I believe this will be a buy for me when it hits £22 per share. I am willing to pound cost average down from there and own this surprising fast food king in the UK market. Today Greggs is trading around £25 per share, so we are actually very close to the price where I would start buying. We will see what happens next. Thanks for watching this video. Subscribe the channel if stock market investing is a passion of yours, and I will see you in the next video. Bye bye!